And thank you for inviting me. It's really a pleasure. One thing I would like to add to the introduction is that I'm the former chair of the Supervisory Board of the Central Bank after the crisis. And that's really important. My background is in academia and in startup, actually. I'm Scottish in a way that I'm a rebel. I like to challenge things, and that's the reason why I believe I was elected to the central bank. Because, when the system failed, then the question became, so, maybe this guy, he said something that was relevant. And so they put me into the cleaning department, cleaning up the mess after what happened in Iceland. But one thing I did, which is not the topic of this session here, but I think is really important, is that after the experience in Iceland, I and some colleagues, we decided to start a new company. And that company decided to use this new technology, the blockchain technology, to issue regular money, fiat currencies, euros, sterlings, and so on blockchains. And the reason is we wanted to try to improve the system. And to borrow the quote that was mentioned this morning by Roger, which said that Bill Gates, he said, actually in 1994, that banking was necessary, but banks are not. And I think that's a really good quote. And with these new systems now legal in Europe, then no one actually needs to bank with a bank anymore. And I think that's a really a nice thing. But what I want to do today is to share with you what I think about currencies and some of the lessons that we learned in Iceland. So how does this work? This one here, yeah. It's important to have your own currency. In very short, it is about, in my mind, two things. First, you want to optimize economic growth. That's what you want to do. Economic growth and prosperity is foundational for any nation. Number two, you want to avoid going or default on your own debt in your own currency. And if you have FX, if Scotland doesn't have its own currency, then Scotland can default on debt in, let's say, sterling or euro. And that's really a bad thing, believe me, having been in Iceland and watched what happened over there. So the alternatives, in my mind, for Scotland are continue to use the sterling as is the case today, or join the EU and get the euro. I think that's, as I said, I think it's suboptimal for Scottish economy, and you're not using or you're not fostering your full potential. The British pound is optimized for the UK as a whole, and the euro is optimized for the Eurozone as a whole. And then in my question, and the question that I would be asking is, why would Scotland settle for anything less than its own currency to optimize its own economic future? But currencies are to many something which is complicated. In my mind, it is in many ways like having a stock in your company. And you're using that stock or equity to pay for whatever you want to pay for. And what does that mean? It basically means that if you have a Scottish pound in the Scottish Inc. or Scottish Ltd, it's a company, then it means that you will feel it when Scotland is doing well, because it will appreciate. But you will also feel it when it's not doing so well, and you will suffer. And that will have consequences. But that's part of the feature of your own currency. So, Iceland experience. So we had, before 2008, we had banks that were basically based on European law and rules. They utilized the freedom that the membership of the European Economic Area gave them. And they went on to shopping spree with borrowed money. That's what they did. Icelandic companies. A lot of companies in the UK that the Icelandic banks bought. But it didn't go so well when the liquidity dried up and they couldn't refund themselves. They basically became bankrupt. All of the banks, they just collapsed, all of them. And that basically brought the whole economy to its knees. And why? Because we could not access the payment system. They were the resource of money creation, and people lost their savings. This is the problem with banks, which is not the issue of this lecture here, but this is what happened in Iceland. But luckily, we had our own currency, so we could get in control again. And we also had the independence. We passed emergency laws, basically to save what was left of the banks. We split them up into good and bad banks, and we imposed currency controls. Currency controls were fundamental in the sense that it meant that everyone that had a claim in any Icelandic entity, they had a claim in Icelandic kronur, in the local currency. And we were in control of that. That meant that big banks, German banks, French banks, UK banks, hedge funds, and everyone that was involved in the craziness pre-2008, they were basically locked in. And we could then go and negotiate without any control of the currency, without any control of what legislation we could pass. We would not have been able to do this. So faced with capital controls and being locked in the local currency, we negotiated sensible terms with them, and it resulted in Iceland debt levels being adjusted to reasonable, sensible levels. Now, this prevented Iceland from becoming another Greece, which is a tragic example of what can happen if you don't control your own currency. So then this picture here shows basically what happened in Iceland. It happened over many, many years. That increasing, and then, when everything was shut down because of Lehman Brothers, because of Bear Stearns, and what happened in 2008, everything fell apart. And you see that the gross external debt of Iceland, the GDP of Iceland, 8 times. So it was a big, big mess. So, and the problem with FX is that if it's FX and you don't have control, then it must be paid back. You have to negotiate or you can default. But we managed to avoid all of this. And the same thing is for Scotland having its own currency. It provides control. It provides the mitigation means to default risk or avoid risk. And it's optimizing for economic growth. Roger was mentioning here before when he was talking about the exchanges that, Scotland is educating young people, energetic people. And then they want to start a company to grow the economy. But then they go south. So people, young people, energetic people, ambitious people, make sure that the prosperity is shared, and we are not this is the main thing. And it's not only about going to London. They go to, yeah, some of them go to Europe. But if you read the Mario Draghi report from the European Central Bank that was issued last week, then I think about 30% of unicorns, that is startup companies that manage to become worth more than $1 billion, they move out of Europe to the US because the US is more economically prosperous than Europe. The competitiveness of Europe is going down. The productivity of Europe is going down. So economic prosperity is really important to keep the young people within the country. It is. And if you are willing to sacrifice the economy because you don't want to optimize, use the tools to optimize the economy, then you are sacrificing a lot. Okay, so the question, I guess this was the slide. Maybe one thing I should add here is that in Iceland there is always a debate. Some people love the Icelandic krona, and some people hate it. And why do they hate it? It's because when things go bad, then they will lose purchasing power. It's going to be more expensive to take a vacation in Spain. That's true. But when things go well, like, the last few years in Iceland, everyone is richer. The currency is getting, the purchasing power of the currency is increasing. So in a way, it's one way to share prosperity and basically letting everyone know if things are not going too well, then you have to change the course. And the same would happen with Scotland. And this, in my mind, it's not a problem. It's the feature of the currency. It is signaling how things are going. If things are not going well, then you have to adjust. You have to change. And that is what happened in Iceland, as I will mention better later, and how it did happen. But the reality of Scotland is that you're a part of the Union from 1707, and you think that's a long time to be a part of a union? Iceland lost its independence in 1262. So, it's not a long time. We got our independence first in 1908 and then full independence in 1944. And the reason why Iceland lost its independence in 1262 was in a similar way as Scotland. It was, economic problems. The problems in Iceland were that, there was a lot of ice around the country. It was hard for ships to come to Iceland, and it was a lot of problems due to that. So the Icelanders basically said, we give up. The Norwegian king, they went to the Norwegian king and said, can you please make sure that there will be ships going to Iceland? If you do so, we're willing to give up our independence. And it took 800 years to regain it. So I would be very careful of that. So how well is Scotland aligned with the rest of the UK? One thing is, how well is it aligned today? And I guess Scotland has, different strengths than England with regards to oil, renewable energy, and financial services as well, I would imagine. But what it means essentially is that any divergence between the two economies, whether it's today or in the future, will be set by Bank of England. And that is not optimizing for Scotland. It's optimizing for the UK, and Scotland is a small part of that. And a competitive exchange rate is needed to boost exports, making Scottish products and services more attractive in international markets. So optimize the economy for Scotland is important. And I was asking someone during the lunch break, it would be, why would we need independence and then a currency? Why don't we have the currency and then an independence? And then someone said, well, we are not in full control. But just to have a currency is really a powerful tool. Okay. So, and then the question is always in Scotland about, okay, so what happens if Scotland will rejoin the European Union? And as I understand it, then even if Scotland decides to rejoin the EU, then Scotland will anyway need a currency. It's a requirement for a European or EU accession. First you have to join the European Union, and then you have to basically meet the demands with your own currencies under the monetary rules there, and then you can adopt the euro. So in practical terms, you will need the currency anyway if you if you become a part of the EU. And then it will take time to get the euro. So we're talking about, in my mind, at least 6 years minimum. But then the question also arises, is euro really the vision for Scotland? It may be appealing for someone to join the European Union, but in my mind, there are two questions here. Do you want to join the European Union? Or do you want to join the European Union and get the currency? These are two different aspects. Today, you don't have a choice. If you join the European Union, you will have to adopt the euro. That's a political decision by the EU to make this mandatory. And again, if Scotland would decide to do this and then adopt the euro, then again, the economic conditions and the management of the currency would be decided by the European Central Bank in Frankfurt. And if you are not happy with the Bank of England, then I don't think you will be happier with the ECB. And I actually think, and I'm going to be rather blunt about this, I think actually the Scottish people and the Icelandic people, they are similar in a way that they tend to speak their mind. Whether that's a good thing or bad, I don't know. But I think Scotland should learn from the failure of the euro. And I say this, there is no denial in my mind that the euro has failed. And I encourage everyone to read the report that came out last week by Mario Draghi, the former governor of the ECB. It's a great overview of what has been happening in Europe, okay? One of the data points that he's showing in this report is that he's showing how the EU versus the US labor productivity from 1819 to 2022 has evolved. And what we see there is that, and if you read on in this report, then what I find the most interesting thing in this report is what is not mentioned. Because in the report, he basically says, well, the productivity peaked there because the Europeans, they did not make use of the internet as the Americans. Okay. And they did not, regulation was maybe, too much. But there is no mention of the fact that in this period, then the euro was introduced. And there is no mention that, renowned economists like, Joseph Stiglitz, Paul Krugman, Milton Friedman, Martin Feldstein, and so on, they all warned and said that if there will be a single currency for those economies which are so different, then that will result in less productivity and less competitiveness. This is nothing new. What I found also really interesting from Mario Draghi is when he was in the press conference and he said that it was amazing that only in 2024 that they were discussing this. And he added that if, only 2 years ago, it was impossible to discuss this. Really? Is it impossible to discuss the decline of what's happening in Europe? The data is out there and has been for decades. Why are we not talking about, why is it important to have your own currency to boost your economy? This is hurting Europe. And we know that the euro is a political instrument, try to expedite the political integration of Europe, but it's hurting Europe economically. So my preference for, I understand that many countries would like to join the euro, but don't make it a requirement to adopt the currency, because it's not beneficial for Europe and it's not beneficial for individual member states. So that's my bluntness about the euro. So the currency, it's like a regulator for the economy. It's a feedback loop. As I said, if the economy weakens, the currency depreciates. It is signaling that there is an adjustment that is needed for competitiveness and productivity. And it helps then stimulate export and rebalance the economy to a new reality. And the economy is always evolving. In Iceland, we had really a big shock, and we had to adjust to this new reality. There are new technologies that are going to disrupt existing companies and so on. There's always some adjustment needed, and the currency is just adjusting to those new realities. So, I think I've gone too fast with these slides. So with regards to the adjustment, so your own currency is going to adjust to new reality, and there are two ways for the economy to adjust to changes. One is to do it quickly through the price of the exchange rate, or the price of the currency, and that happens very quickly. Just like what happened in Iceland, it happened very, very quickly. We lost half of the value of the currency. It was devastating. But what happened in Iceland was also devastating. We lost all the banking system. We lost all the revenues that came out of the banking system. So you have to face reality and just adopt and move on. There's another way to adapt to changes in the economy, and that is what is happening in Europe. And that is slowly through unemployment. So if there's a shock, there's a new technology, you lose competitiveness, then people will lose their jobs. And then gradually over the years, that will have, make the companies respond and so on. But this is a slow process. And that has cost. It has a cost for human capital. It's eroding human capital. And there's also social cost. If you lose your job, you lose your skills, you have to be re-educated. The state has to, support you. That's going to mean that there are higher taxes and so on. So there's a huge human cost to adopting economic changes through the unemployment, like it's the case in the Eurozone. And this was a decision taken by politicians that this is the way we want the economies to adjust, through human capital. I prefer the other one. And we can contrast, what happened to Iceland. It was painful, it was fast. What happened in Greece, Spain, and Italy? They have been experiencing huge unemployment for years. What does that mean? It means that there are a lack of opportunities for young people to have jobs in those countries. They just move elsewhere. There was recently a documentary about the situation in Greece now, about how the young population basically just left. And what does that mean? It means that Greece is left with an older population, less productivity, innovation is not there, and the taxes have to be raised because the welfare state, needs their support. But those that were supposed to be the engine for the economy, they have just left. So there are just two ways to adjust to economic shocks, through the price of the currency or through unemployment. And I think, honestly, dear Scots, please learn from Europe and don't repeat this. This is really, really not what I think is ideal. So just to conclude this, the important thing is that whatever is going to be decided is going to have lasting impact. These three options, the Scottish pound, the British pound, or the euro, to choose wisely is really important. But I would say that the best way to deal with economic shocks when they arrive is to do it quickly, face the facts, and then move on. Don't take it out on the human capital, because that will spiral into bigger problems. Iceland used to be the poorest country in Europe. And in my mind, there is no doubt that because of the fact that we have had our own currency for a long time, actually before we became independent, that was crucial in basically making sure that the economy is flourishing and young people want to be there and stay there and build their companies and future there. If Iceland would be suffering economically, it's really easy, just to move to whatever, Europe or US, and then Iceland is over. And also, Scotland in the past is known for, all these thinkers, Adam Smith, the father of economics, David Hume, literature, technology, innovation. You want to keep that for the future as well, but then you have to have a very strong economy. So optimize for economic growth. I think Scotland can do much, much better moving forward. And I don't think it's an interesting vision for Scotland to become, shall we say, a footnote of UK history. I think Scotland needs more. Thank you.
Thank you. I'll just ask Jón to stay on the stage for a moment in case anyone has any questions that they'd like to ask him. I think I'm going to have to limit it to just a couple, if that's okay, because we're slightly over time already, even though we've just started this session. So maybe someone who hasn't spoken much so far today, would that narrow it down a little bit? There's a gentleman right at the back over there.
Hello, I thought that was an excellent presentation, but one question flags up for me right away, and it's called Denmark. Denmark, as I understand it, is one of the 5 countries, including your own, that have their own krona. And Denmark's been part of the EU since I don't know how long. Is it seriously going to be the case that the EU is going to force Denmark to abandon the krona and adopt the euro? I don't think it is. And in those terms, I doubt very much whether it really would be the case that if Scotland had its own Scottish pound and then applied to join the euro, the EU, that they could conceivably tell us that we have to abandon our own currency. They'd certainly have to tell Denmark to do the same.
Yeah, so I'm no expert in EU law, but what I know is that when Denmark applied, they they didn't want to be, just like Sweden. Sweden actually is exempt from the euro. They have their own currency. Denmark, they do not. They are a part of the I2, I believe it's called. You know, the mechanism that's basically adjusting the Danish krona. So they are pegged to the euro in a way. There is some wiggle room for them, but they are pegged. You have other countries that are obliged to adopt the euro, but they haven't fulfilled the requirements. I believe, I don't know what year it was, but there was a change in the euro policy that you don't have a choice anymore. It used to be a choice, but not anymore. And I don't think, honestly, when Iceland, during the collapse in Iceland, then a lot of people lost hope in Iceland and they want to be a part of the EU. You know, if you don't have self-confidence, you go to the EU. And and Iceland applied to become a member. And then people said, well, you will have to adopt the euro and you will give up your fishing rights and all of that. And then people said, well, we can negotiate. But that's not true. You don't have any negotiating power against the EU. If you want to join, you join on their terms. And this is now a requirement. I think it's a mistake for the EU to make this a requirement. But still, it is a requirement today.
How did you set up your own currency before you became independent?
So we had our own currency before independent. I mean...
Yeah, how did that happen? I mean, at what point did you start to use your own currency?
Well, it's a long story. In 1817-something, we were actually a part of a currency union with Norway and Sweden. That didn't go so well. Like most currency unions, they don't go well. Later, I mean, the oldest Icelandic coins are from 17-something. How exactly it started, I'm not sure. But we have had our own currency for a long, long time. At one point, we were pegged with the British pound. Then we abandoned that.
Hi, thanks for that. There's a lot of interesting material in there. Just quickly on the question of compulsion to join the euro, my very clear understanding of it is that you would have to commit to join the euro at some stage. The date is not specified, and that's how Sweden gets around that, because it just puts it off and puts it off. I think you're very right to point to Greece as a poor example. Greece, in order to join the euro, fiddled its accounts and presented effectively false accounts to the EU to make the case for them to be allowed to join. That's a warning for Scotland. I subscribe to your position that a Scottish currency is a necessary training ground is the wrong word perhaps, but it's a necessary part of the learning curve for an independent Scotland to become a fully fledged independent nation. But that if you then try to fiddle your figures, you're only fooling yourself, and you cause the problems that Greece found itself in with the crash. So I think that is actually very much a useful lesson to point to Greece, but that's the lesson I would take from Greece rather than putting it on the Eurozone, which arguably shouldn't have let them in, but that's fair enough. Sorry, I did have a question about the diversity of the different economies, the structural difference between the Scottish economy and the Icelandic economy. I suspect is...
The convertibility between Scotland and England, or?
No, between Scotland and Iceland. Does that make a difference to how we should look on these decisions?
I don't quite understand the question. What is the question? The convertibility?
Well, it's certainly going back a few years now, but The Icelandic economy used to be largely based on fisheries. I dare say it's a lot more diversified now, but the Scottish economy, of course, is much more diversified than that. So that affects how we trade with the rest of the world all over the place. Whereas the Icelandic economy is quite a different consideration. Does that affect your analysis?
Yeah, it's true. Icelandic economy was very dependent on fish in the 1950s, 40s, 50s, 60s. Then we became dependent on fish and energy. We have a lot of aluminum plants over there. And then tourism came more important, and then the software business came more important. The more diversified the economy is, then it's better for managing the currency. But at the end of the day, it's all about having a currency that responds to your specific needs. And yes, Scotland is more diversified, but still, it is not the same development as in other parts of the UK, and not as other parts in the Eurozone. So I think it's really important for Scotland to optimize for economic growth of Scotland. That is the important thing. If you can get away with EU membership without the euro, fine, but don't sacrifice your currency.
Thank you, John. That's extremely interesting. Just further to the comment made by the gentleman over there and yourself about the requirement, if you're going to join the EU, to use eventually use the euro, and you pointed out that that's no longer an option. Well, am I right in thinking then that anybody who's already joined the EU and is still using their own currency, that because they joined before any decision was made about further applicants, that they're okay with the old arrangement, but anybody joining from now on, or from then on, will have to abide by the new rules. Is that correct?
Yeah. So there's a very good example of this. So Estonia is a part of the EU. And Estonia they are a very innovative company. Per capita, you don't have more unicorns that are produced anywhere in Europe. They're from Estonia. Estonia has embraced new technology like the blockchain technology. And at one stage, they said, we really like to have our own currency. Okay, the euro is here, but we also like to have our own currency, and they were going to issue their own currency. But it was banned by Brussels. So basically, you lose control to Brussels. That's
Hi, Danny,
you don't like the British?
You
want to go to Brussels? To me, that's the worst option. It's worse. So EFTA has served Iceland really, really well. We're part of the single market, but we are not forced in ways that other member states are forced.
Okay. Thank you,
Thank
John.
you.
Thank you very much.
So I want to talk a bit about my experience on the NPC and really where they are now. Hopefully everyone can hear me. I think there's a lot of interesting things to think about. My experience, and I think it's probably true for the last 20 years, is that dissent is not favorably looked upon. As you see, I was at one point called an idiot without a village, and you'll see a couple of the quotes coming. And I think there's a lot of things to be learned from the power of groupthink. And my buddy, Richard Murphy's coming, I'm not sure if he's directly after me, but coming in a minute. So I was actually appointed, and I think it's quite interesting to think of the role of the outsider. I was very much an outsider. When I got appointed, I was actually the only non-Oxbridge person on the committee, and that was pretty much what went on. I was also the only person on the committee who didn't live in London and the Southeast. And I think this, the slide's still there. Sorry, I think, yeah, in London and the Southeast. And that's pretty much been the story. There has been people flown in from America, but basically nobody who represents Scotland, Ireland, Wales, and other constituencies, and knows things about the real world, and knows much about what happens north of the Watford Gap. I have a sense in the United States that the regional presidents are pretty important because they get to, basically 5 of them get to vote on at every meeting. And we just had a meeting last week at the Fed, and all the bank presidents voted for cuts, and one governor for the first time in 20 years dissented. So there hasn't really been much evidence of dissent. And so I think the story I'm going to say to you is, being an outsider, having views about the real world, and not going along with groupthink has been a major problem. And what was interesting, Gordon Brown called me up and said, Danny, will you go on this committee? And it was clear at the very outset that the bank actually was briefing against me and has done so against various people. And in fact, what was really clear was how much centralized power there was in the hands of what I call the Iron King, who, as we well know, failed to spot the greatest recession in 100 years and said that wasn't really what you'd expect the governor of the Bank of England to do. Actually, it was what I would have expected the governor of the Bank of England to do. What was interesting, I think I just would say this to the Scottish audience, the MPC, and the whole time that I was on it, from certainly 2008 onwards, was never, ever briefed about the failure of RBS or Lloyds. The MPC was never told that. We knew there was chaos going on in the markets, but we actually really found out about it as you did, which is absolutely outrageous. So this is supposed to be members of a committee setting rates, not told what was happening to the banking system. And also we had no input whatever into what kind of, when we did QE, what we were buying, why we were buying it, and so on. So if you're going to have an MPC, it has to be a fully powered one. And you'll see I have proposals for doing that. I'm called the greatest dissenter. I think I've voted for cuts 15 times and dissented from everybody else 15 times. So I think it's quite, and in the end, turned out quite well, I guess. Can we go to the next slide? I mean, the power of the power of trying to dissent was actually quite complex. So I look back, this is the best speech I ever gave, which again, I'm going to give you my Edinburgh connection, my Scotland connection. I gave a speech on April the 29th, 2008, where I said, and I'll just give you the first quote, by approximately 2007 December, the housing market problems have now spilled over into real activity. The US seems to have moved into recession around the start of 2008. And then I say, basically, and so is the UK, which turns out, with hindsight, to be correct. And so what you see is this fundamental failure, even by October 2008, which was basically once RBS had failed. The committee comes around and says, okay, eventually we'll go along with Danny, who got lucky. And so we start to cut rates. But just one quote that I give often and still upsets me. Look at this. This is sort of the power of the establishment. Next slide, please. This is the power of the establishment. This is Charles Goodhart on August 29th, 2008, noting that the US had been in recession since December and the UK had been in there since April, as had every other European country. He told the BBC he wasn't surprised that I'd spoken out. He's very much an outsider. He's been in a minority literally every month he's been on. I'd expect those involved in the financial world will not take what he says as any indication of what's likely to happen in future. Probably should have, right? Still haven't had an apology from him for that. But let's go on. And I want to try and think about where we are and what's going on. So I would say the first thing we've realized is that the fact of groupthink has really meant there's been no regional representation. And if you think the view of Scotland has not been considered, I mean, I actually can tell you, I was on the MPC and Alex Salmon and I had a series of meetings thinking about, would it make sense, whatever way forward you go, would it make sense, which I believe it would, to have a Scottish representative on the MPC? At the very least, why not have one? And we'll talk more about it, but my view is that that's absolutely what should happen. Why do you want ex-civil servants and city economists and people basically who used to work in banks setting rates essentially when you have no regional policy? What you've done is you've abrogated all responsibility for macroeconomic policy to the Bank of England, and that's more or less, I think, where we are with Reeves, and we'll talk about it now. So what's interesting is the bank never learned really anything. didn't learn anything from the fact that it missed the big one, didn't really understand what had happened post-COVID. And I think what's interesting, if you look at the Bernanke review, talked about the failure of forecasting and so on to get things correct. But what he should have probably done is go back to 2007 and 8 and say, well, how come not only did they miss the burst of inflation in 2020 and so on, it missed everything in the period to the Great Recession, and also from the period from 2010 to 20, basically underestimated the extent of recovery, kept talking about things are going to get better, everything's going to improve, and it didn't, and they had to keep rates at zero. And my successor, David Miles, who took over from me I think it was the 6 years he was on the committee, never voted to raise rates from zero once. So where are we now? And we can talk a little bit, well, I was happy to take questions and so on in a second, but the thing which strikes me is once again the MPC's behind the game. I mean, in 2008 it was behind the game. Took a long time to cut, eventually had to cut because it had to cut because RBS had failed and there was a global collapse coming, and on October the 8th, 2008, 6 of the world's central banks cut together. That's blind panic. And it seems to me we haven't really learned much from that. So what you got this week was the Fed cut rates by 50 basis points in a surprise. I mean, it's fine to do surprises. Markets had fully priced in a cut, but had only partially priced in a 50 basis point cut. What's of interest to economics in the UK is that now markets are pricing in 6 cuts by June in the next 6 months. So basically, if you look at this is just to read off the probabilities of where markets are. So 375 to 400 has a 1% probability. 350 to 375 has a 7% probability. 325 to 350 has a 22%, and 300 to 325 has a 34%. So basically, markets now in the US are fully pricing in cuts, probably 50 basis point cuts, at pretty much every meeting over the next 6 months. So where's the UK is behind the game, didn't cut this week. So what you've seen around the world is that this is a global move and the UK is behind it. The ECB is cut by 50 since June. Denmark's cut by 50, Canada by 75, New Zealand by 25, the UK by 25, but seems to be behind the game. A conversation I want to have, and Richard Murphy and I have been trying to think about, is in the end, okay, the ultimate question is, why do we care so much about inflation? We've had a burst of it. But the evidence actually is that we certainly have to have a think about having a remit to maximize employment. I mean, the Tories took that part away. So now we're at 2.2% inflation in the UK, and with expectations that this is going to get much worse. Next and final slide, please. So they sat pat. So what's going on? And I think this is really the concern that I have where we are with the MPC. So what did they do? Perhaps you could see that you were sitting at that committee and you say to yourself, well, this is highly political. We realize that Reeves has told everybody she's going to slash like crazy. So what does that mean? If you're going to slash and you're going to do austerity, as all the mood music is, although they're tempering it a bit at their conference because the poll ratings have been collapsing, you sit and you wait to see how much Slasher Reeves, because I used to call him Slasher Osborne, well, we appear to have got Slasher Reeves now. You wait and see how bad things are going to be. But the problem is sitting and waiting is a big problem, and the MPC seems to have lost the plot. Here we go again. So where are we in output terms? And especially what do I particularly concerned about? So the GDP growth has been weak, and actually GDP growth in June was 0, and services output fell. And then what you saw after the MPC meeting was this measure of consumer confidence, which has collapsed. And I have a whole series of papers in the National Institute Review and other places where basically I say, and my speech in April 2008 said, actually you could predict a slowing economy and rising unemployment by this consumer confidence collapse. So here we are. The MPC is supposed to look forwards, and I'm going to just spend a second on that in a minute. So what have we got here? So actually, payroll employment in the UK fell. I know there's issues about how you use the LFS and so on, but UK payroll employment in the last month actually fell. CPI is down from 6.7% a year ago to 2.2 now, and it's averaged about 2.1 in the last 6 months. What did I start out doing in my life? I started out in the 1980s thinking about youth unemployment. And obviously what happens when an economy is slowing is marginal things move first. So what do we see in the youth unemployment? So youth unemployment, last in, first out, all of that stuff. And what do you see? Well, no one seems to have spotted that youth unemployment is going through the roof. It was 10.2% in December. It's now 13.3%. And so that's a really big deal. I'm going to get to what I think we should really see, but the problem is we need to get the MPC to support the people and not hedge funds, not just hedge funds and banks. And clearly that's, if you look at who's been appointed, it's representatives of the Treasury and people who work for banks, and probably when they finish, they're going to go back to work for banks. One thing I really want people to sort of think about is that when I was on the MPC, my view always was that what you had to do was think about what I'd call the forecast horizon. So you'd think about what is the world going to look like in 2 years' time, 18 months to 2 years' time. And then you make a decision every month. Now they don't do it 8 times. We used to make it every month. And you think to yourself, what am I going to do today? How does that impact things 18 months to 2 years out? And obviously data can come in, but if the data is kind of what you expected, then you say, okay, data came in, it was bad, but I actually expected that. Does it really impact what happens 18 months down the road? Well, the bank's got itself in such a little tizzy, in such a bad position, as Bernanke has explained, that basically what they do is they're overtaken by bad events. They're not really sitting thinking forward, they're responding to each little signal as it comes. But that's a function of their very poor forecasting. And their inability to kind of get a set of opinions together. So you end up with, I mean, for example, you end up with an inflation report, a monetary policy report of all the members of the MPC. Everybody agrees to it. And the problem that I had was I used to dissent at meetings, but I had no opportunity or possibility to actually dissent from the forecast from this inflation report. There was not a single possibility that I could dissent from the report, or I could dissent from various parts of it. So that's got to change. So I'm happy to talk more about, what would happen if there was a new, if Scotland was to become independent, what happens if they got a new currency? But even going forward, what reforms should we see? So we should focus on the possibility that people are going to dissent and sensibly dissent. I mean, as I say, that we'll see, but there's not been a great deal of dissent. So I'm going to stop with this and just sort of get to questions. But I think what you need is you need to maximize the possibility that people can think long term, that they have full use of resources. So when I was at the bank, basically Mervyn King stopped people working for me, remove resources. There was a huge fight earlier before I was there with Sushil Wadhwani and Deanne Julius trying to get resources. So basically the governor and the board, if you like, could dominate things. I mean, the whole time I was at the Bank of England, there's a board of directors. Not once did they ever ask me, in the whole time that I was there, when I dissented at every meeting basically for a year, nobody on the board ever asked me to come and tell them why I was dissenting. Nobody actually spoke to me about it. So I think the way we have to go here is to basically empower people on the board so that there are strong, powerful people who are full-time. So our suggestion, and Richard and I, and Andy Levin and I have been thinking about this for a while, is you would have something like a 5-person full-time board, fully resourced. I mean, the model is the model in the United States, where there's the Boston Fed and the New York Fed and so on. And that one possibility is that you would, 3 of those members would be appointed by the Scottish, Welsh and Northern Ireland government for 5-year terms, fully resourced, pull the resources out of the Bank of England and send them to Edinburgh or to Glasgow or whatever. The Prime Minister can get to appoint the governor, and the 5th person on that board, the Lord Mayor of London, can appoint someone to represent the city. That way, at least, then you would have possible dissent. You wouldn't have to have an MPC report. You could have the Scottish representative has their view. They have their view of how the economy is. Okay, there's a collective vote, but in the end, you can have dissent, and you can have dissent in a world which is complicated. So anyway, let me stop there. But I think once again, the MPC's lost the plot.
What do you think of the idea of having a trade union representative on the MPC?
Well, I mean, the question is who gets to appoint it. I mean, I think it's hard to work that out, but I think what I want is a mechanism by which people represent broad views. I mean, I think, and broad areas of expertise. I mean, obviously I've said, that I think you need to have people who represent people on there rather than representatives of banks, representatives of the Treasury. I don't quite know how you would do that. I mean, you certainly, the way I would do it was that if the Scottish government, let's say, gets to appoint it, they can appoint who they wanted, including the head of the units, if that's who they choose to appoint. So that's completely up to them. I don't think that would be nuts, but it's pretty likely. I mean, how likely would it be, let's say, the Scottish government appoints a banker? I don't know. Maybe the Welsh government wouldn't appoint a banker, but I think you have to think about democratically appointing people. Not clear that you should just go and say, I'm going to appoint a union official, just like they go now and appoint a banker. So I think my view would be, I like democracy. I mean, I always felt, I had a big fight once with Mervyn King, who actually in a meeting, I can tell you this, in a meeting, he told the Treasury representative who used to come, he said that he should tell Gordon Brown, who was the Prime Minister, to shut up. And I flipped and I said, this is democracy. He's been elected democratically by the people, and we're just appointed officials. How dare you tell the Prime Minister to shut up? That's just nuts. So I think the answer is democracy matters, and if the people want to appoint a union representative, that would likely be a lot better than having another representative from the banks or the hedge funds, right?
Okay, thank you.
Think of Catherine Mann or...
There's a question down here.